Hello, everyone, and welcome to the MakerDAO Scientific Governance and Risk Meeting, number 143, taking place on Thursday, May 27th at 1700 UTC. My name is Long for Wisdom. I'm the governance facilitator at MakerDAO. I chair these meetings. So yeah, we've got our usual agenda to get through today. We've got some updates from the usual suspects. We've got a segment from risk, talking about DAI price dynamics, some risk metrics. Going to have sort of maybe a brief discussion at the end about a pre-MIP discussion from Andrew Bourbon. So yeah, I'll go through the usual preamble stuff. You know, we like answering questions and kind of getting feedback from you guys. So if you have any questions or comments, feel free to ask. We'll kind of break for questions after each section. So please do speak up if you have anything. Okay, so I think that will start. I'll start with the governance updates for the last week. It's been a little bit eventful in governance last week. So we had some trouble passing the week before last's executive. To the point where we, in fact, ended up skipping, in fact, entirely last Friday's executive, based on the kind of time constraints. So that wasn't ideal, but we did manage to put up the monthly MIPs executive on Monday, which did pass fairly swiftly. So we should kind of be all set from now on, or going forwards. So we'll have an executive on this Friday as usual. It'll include what was going in last Friday's and some other stuff. But on the right side, the week before last executive did pass. That brought some minor stability fee changes, some minor debt ceiling changes. It replaced the Uniswap LP token oracles with the audited versions, which is great. Fixing up just a few minor issues. We also had the monthly MIPS executive, which I just mentioned, for May. That passed. So that brings us the Sustainable Ecosystem Scaling Co-unit. So congratulations to Juan, Wouter, and those involved. You are now officially onboarded. Welcome, etc. We also approved MIP, I think 51s with some changes to the monthly governance cycle. So David's kind of been talking about those a little bit in the MIPS updates for the last few weeks. I'm sure I'll cover it again today. And we'll kind of make sure everyone knows what's going on in June for the monthly cycle. We passed some minor amendments to MIP 0, making it more clear, shorter, more easily accessible. And we passed MIP 50, which was the direct deposit module presented by, I believe, Sam and Stanley from Aave. So we also had one poll last week, which was to whitelist B protocol on the WBTC USD Oracle, which passed. So I think we'll see that in an executive soon, possibly either this week or next week, not sure. This week's executive at the very least should include moving the Uniswap LPs to liquidations 2.0, which is what we skipped last week. And it'll also include 2 urgent changes that we kind of polled on earlier this week, based on the increased amount of USDC used as collateral in the Maker protocol, in combination with the market dips. So those changes will be to increase, or those proposed changes will be to increase the PSM USD CA ceiling from 2 billion to 3 billion, making sure we have enough space to keep the peg super tight on $1, and setting the tip to 300 DAI on all vault types of liquidations, just to make sure that liquidations run super smoothly, even on smaller vaults. So I think that covers the governance things that happened. I'll give a brief update for GovAlpha as well, but I'm going to try and keep it as short as possible. I've actually done a forum post, like some of the others have recently, so for details you can go here. I don't think there's anything like kind of critical or game-changing that's happened in the last week. So you can kind of see that link for like a sort of general update on some of the things we're working on. But I don't think there's anything really worth calling out as like exciting or finished. So with that, I'll maybe pass it to Peyton to do forum at a glance, I think.
Yeah, absolutely. Also going to be trying to do a little bit of a abridged version here, keep things moving along. Long mentioned the couple items in the executive vote that'll be going due to the kind of urgent polling situation there. Congrats to Juan and the whole team over at SES. Also wanted to highlight the upcoming AMA with Will from the Real World Finance team. That's going to be next week at 2100, June 3rd, I believe that's a week from today. Yes. So next Thursday, 2100 UTC. Posted the link so you can follow some of the active discussions that are going on in the forum. It's been a pretty busy week, so there are a lot of topics to cover if you're interested in weighing in and sharing your insight. I will go ahead and name all the 5 active signals that are going on right now, just to give you a chance to head over there and vote if you haven't already. The first being a signal request to burn the 84,000 MKR from the foundation. It's a pretty simple yes, no vote there. Next, we do have a signal request on the PSMs for adding new PSMs, essentially, sorry. Whole list of those there to vote on, including USDT, BUSD, PAX, TUSD, and GUSD. Signal we got there is a continuing one from Shupi last week on an ETH-C type vault for Wi-Fi. So that would be with the higher collateralization ratio and lower stability fee. Monet Supply brought a signal request for adjusting the dust parameter. We have 3 options on that one, I believe, for ETHB, ETH-C, and the remaining vault types. So you do have a chance to give your different opinions there. And finally, there was a kind of counter Treasury protocol meme signal request, basically asking if we should burn or even mint some MKR to get us to a meme amount number. I guess possibly in conflict with burning the entire 84K from the foundation. So like I said, links in the chat if you want to follow some of the other stuff, but that does it for me.
Great. Thank you, Chris. Yeah, so that covers, I think, all our governance stuff. So let's move on maybe to protocol engineering. Chris.
Hey, everybody. Chris, protocol engineering. Sorry if my connection's bad. It's been pretty bad today. Yeah, so we had the executive last week for the LP tokens. And I know that's a sort of like just a large categorization. So really what we mean are LP tokens that don't already have
You have to be hard to time it, huh?
It's impressive sometimes.
is being moved because liquidations are on. So basically every, let me know if I, just keep moving, Anthony.
We lost you a little bit there, Chris.
Okay, so
you're saying about the LP tokens.
Yeah, so the Anthony, just keep moving. I'll know when I've lost you. So the LP tokens that have liquidations on are in the spell. The LP tokens that don't are not, and they're part of the stablecoin class. And so all that spell is ready and deployed. However, there are a number of changes that maybe came up because of last weekend. So there's a sort of urgent request or polling for the PSM USDCA debt ceiling to be increased, and also to better incentivize people to bark for liquidations. And so I think what we're going to do is just add those 2 configuration changes into the spell and redeploy it, and that'll be what goes out on Friday. As for next Friday, we have the stablecoins planned for that executive, but I was just talking with Primosh, and I'm not entirely sure that we have like a good idea of what the liquidation curve should look like. And so, and it's also like heavily dependent on what we're going to do with the PSM. So there's another urgent request out for determining whether or not we're going to, sweep things into the PSM. And so, so I think that it's very much sort of up in the air as to what we'll do with stablecoins. Luckily, everything that's left doesn't have liquidations on anyway. It's mostly just cleaning up technical debt. So that's where we are with the executives. As far as collateral onboarding, we've got an ex-sushi evaluation out, and we are also evaluating, I think there are 4 centrifuge assets. I got one of them up in the forums today. The others are similar technical assessments, so they should be forthcoming shortly. And then there's the sushi join adapter, which we wanted to deploy the week after the stablecoin executive. And so there's the audits are complete there, and now we're just sort of working on integration tests and making sure that that works. And yep, aside from that, there's also a lot of discussions around layer 2 / multi-chain strategies. And there's been work on the sort of optimism die bridge, getting that ready for audits, and you know, just the sort of higher level discussion of what our sort of scaling strategy is going to be with regards to layer 2. Maybe that's a little too like let's just say with regards to scaling, I guess. But yeah, and then that's pretty much it for me. There were a number of discussions as well, but I think everyone else is also involved in those. So is there any, maybe first I'll ask, is there anyone else on the protocol engineering team that is working on something or recognizes something I forgot and wants to bring it up? All right. And then next, are there any questions from the DAO or anyone, users?
So we'll ask Rust in the chat if there's a new release date for Optimism. Don't know if you guys have heard anything.
Yeah, I don't know. That's actually a good question. So I don't know if Chris or Bartek, maybe even Sam might know if there's a.
So I can take this one. But I'm thinking, is it public or not? But I think it is. So whatever the date, it's in the latest blog post of Optimus. I think it's July. And yeah, it's on their landing page. And maybe one more thing that that we're working on is Arbitrum bridge. So the same thing as for Optimus, but for Arbitrum, which is going to launch soon, like tomorrow. At least the mainnet for developers. That's what they call it. They call it.
Great, thank you, Chris. All right, if that's all from protocol engineering, we'll maybe move on to oracles.
Sure. So I think Mooney mentioned, right, we want to get the remainder of the LP tokens, namely the stablecoin variants on liquidations 2.0. I think we got a little bit fortunate in the past week, right, when we had the meltdown, that the LP token vault owners were quite active in kind of unwinding their vaults on their own, rather than letting them go to liquidations, because we've never seen that kind of volume go through liquidations 1.0. So I'm not sure if we got really lucky there and avoided a bullet, or how that would have played out. But I'd feel much more comfortable if they were once they're on 2.0, because then they can be immediately unwrapped and then just basically dumped on a DEX right before anyone needs to have the capital to purchase them.
Nick, can I add just an interesting observation to this? Sure. Is that during these pullbacks, the LP tokens end up taking a ton of income from fees, right? So they make all kinds of additional fees from people panicking and swapping through those pools, and so that actually, in theory, should bump the Oracle price, which may make them even more resilient than we had originally anticipated against liquidation. So that might be part of our happy accident, where part of their resilience over the weekend.
Yeah, for sure. That probably played a part as well. So then on the core unit side, we're just kind of figuring out more on the strategy side. So I think we've talked a lot about real world assets, but now once you get into the nitty gritty of how do you actually come up with a generalized framework for valuing this stuff? How do you partner kind of with neutral parties, right? That everyone kind of trusts in the real world, and how do you convince them that of this service, and how do you price that service? So these are all kind of interesting details that are popping up. The other thing we're looking at very closely is L2s are slowly starting to come online, right? So we have Arbitrum launching, I believe it's later next week, right? We have Optimism coming out soon for Starkware, right? There's the generalized kind of mainnet that's coming out, right? That's not isolated on its own. That's not isolated for each app on its own rollup. That should be coming out quite soon as well. And we kind of need to keep tabs on which applications are going to be kind of deployed where is the herd kind of going, right? Especially with kind of upstart protocols, right? That are that are of the mindset, right? That they can't really compete with the behemoths on L1, but they can, try to get traction early on L2s. We have to monitor that very closely. I think L2s are like a big opportunity for oracles because on L1, the business equation is that they're kind of cost prohibitive in terms of the gas costs that it takes to update them, right? So if it's not a collateral type in the Maker protocol, the cost to spin up a new oracle, right, is in the hundreds of thousands of dollars a year, something that an upstart protocol can't really afford to cover anyway. But this is completely different on L2. At least, until L2s scale really, really hard and gas costs on there become prohibitively expensive as well, which will happen eventually, but for now is not the case. So on L2, right, we could probably get away with spending less than $1,000 a year on maintaining and updating an oracle, which makes us much more competitive with Chainlink, right? Because then it doesn't become a game of who can bleed the most money. So that's something that we've been prepared for a while. So our Oracle infrastructure is basically blockchain agnostic, right? So every time you've heard me talk about like Scuttlebutt or libp2p, right? These are non-Ethereum based kind of infrastructure pieces of the Oracle setup. And so everything can really stay the same. And for contracts that support the EVM, right, we can just deploy the same contract we have on the Ethereum chain. The only thing that needs to change is on the relayer side. Instead of pointing them to an ETH kind of RPC client, you point them to, the Optimism client or the Arbitrum client or, the Starkware client. So we're really well positioned to just deploy, within, say like a week on these L2 chains. And so that's been like by design. So it's really just about, okay, where are things heading? Who's using what? Where do we see people developing on? And where can we kind of seize that opportunity?
Okay, is you done, Nick?
Yep.
Cool. All right. Any questions for Nick or on oracles? All right, let's move on.
Yep.
Rest go for it.
Sure. So we made few parameter proposals this week. One was posted by Monet Supply, asking for a higher dust limit. So there is a signal pending. So please have a look and vote. I also made another 2 proposals. One was to introduce flat fee reward for barking auctions, 300 DAI. And then the second proposal was to increase the ceiling for PSM USDC, because if you have another downturn in prices, we could hit the PSM debt ceiling, and of course the peg could escalate. Because this isn't only a risk-related topic, I made a signal, and I think 3 billion debt ceiling vote won, which means we should have this increase of debt ceiling, including the STIP incentive, so the bark incentive flat fee implemented in the next executive vote, so tomorrow. We're also finalizing stablecoin vaults liquidation 2.0 parameters, but as Chris mentioned, we really want to see the outcome of this poll about PSMs first, so that we know, what kind of auction price curves make sense here for the vaults that won't be migrated into PSM, because there's a huge difference what kind of floor price do you want to set in the auction. So it may take some time before we really know what can actually be recommended here. Mark also published 3 Sushi LP evaluations. We're proceeding with the evaluations of another 3 this week. We'll likely do again ETH pairs, because they are the biggest pools. So this would probably be YFET, Linkit, and David. And we're also thinking to do Sushi LP pair afterwards, because the pool size is pretty big. We could probably get some meaningful DAI supply out of it. And then because Sushi would be a new asset, we were thinking to at the same time also cover X Sushi, because we need to evaluate this token anyways, if you want to onboard Sushi LP. And then lastly, next week, parameter proposal group decided to hold a monthly meeting to discuss and recommend rates and debt ceilings. So our team needs to focus again on refreshing risk premiums and recommended maximum debt ceilings, which could be more important this time, especially if we are going to potentially reduce rates because of the increase in USDC exposure. And also it might be important because we might recommend to finally increase the ceiling on ETB, because we saw the liquidations are running much more smoothly now. At the same time, I may recommend tweaking some of the auction parameters, especially those for ETB, where I already mentioned that it would be better if we had a bit shorter duration for vaults which have lower liquidation ratios, such as ETB. And yeah, this will be especially important if we consider raising debt ceiling. So I think that's all from our side for this week.
Great, thank you very much. Did anyone have any questions for Pramesh? I saw some side chatter about Dust.
Yeah, I mean, I can probably get the details out of the forum thread, but I was kind of just asking if we still thought a Dust increase was necessary, given that Liquidations 2.0 is less gas intensive.
Yeah, so I think Monet made calculations. So I'm just looking at the table right now. So if the gas price goes towards 1,000 and above, you would still need 10,000 Dust on something like ETA, for instance. So in general, it really depends, at what versus what gas prices do we want to protect ourselves and also users, right? Because also the unwinding costs. So it's not only about liquidations, it's also when they need to unwind, and then it costs $2,000 in gas, and yeah, 5,000 Dust isn't appropriate anymore.
Fair enough. I guess I'm curious if increasing tip offsets that at all. I guess if we can. I mean, can we just increase tip further to keep Dust low? I guess to some extent we could do that, but we can't exceed the liquidation, the penalty percentage rate.
Right. Yeah. If increased Dust penalty fee is higher, and then we could potentially increase tip. But yeah, 300 tip might be more or less okay. Again, depends on the gas prices.
Fair enough. All right, any more questions for us, or should we move on? I think we're good. Chris, you can catch up on the recording. Yeah, so let's have a reward finance. Seb?
Yeah, sure. So on our side, for the centrifuge batch, it will be delayed a little bit due to the slipping executive. It will be probably on June 18th. We have published the People's Company risk assessment last week. I thought that the smart contract start to publish the smart contract assessment as well. So I expect the polling to be on chain next week for onboarding. We have worked significantly on the trust model. I want to mention that there was not so much discussion on the 6S preliminary contract assessment, but I think it's quite important that everyone is looking at it. We are working on making small changes to this model to be used for other implementations like SolarX, Reno, and all the further developments that will use the trust model. So I published something about that. You can find it on the forum under the real-world finance section. And we are in the process of engaging a Cayman specialized law firm. The name is Ogier, to help us to understand the law in the Cayman Island. Keeping on the legal side, we are running a bit late with our legal advisor, but we are still in the process. We need to pass some KYC. It's always a bit tricky for those companies to work with the DAO when the customer is not really the customers, but another party of the DAO. I published a bit of research on designing a stablecoin liquidity, just that there was a lot of discussion regarding the PSM. Should we diversify? Should we have a big exposure to the PSM or not? So that can be useful for some. And lastly, we are thinking a lot lately about the strategy for real-world assets. So on one end, starting end of the year, we no longer want any small real-world asset, like below 50 million, because it's just too much work for not much. And we want to be more aligned with what we want to achieve and not just depend on what is coming toward us. So maybe do some specific investments that can help the balance sheet of MakerDAO and not waiting for people to show up and use only those people. And that's about it for our side. If you have any questions, please ask.
Seems like maybe we're good.
Yeah. Hey, sorry, Long. Can we get an update on 6S Capital from you or Matt? Like, how far away?
Yeah, that's actually already agendaed. So Matt, go ahead if you like.
Any other questions for Sebastian before I start? Okay, well, I'll get started then. So these are some, I guess, some statements I wrote down. Just indulge me, please. This will take about 5 minutes to get through, and then we can discuss. So this entire process for 6S Capital kind of started, I guess, in July last year, in the middle of a global pandemic where all the banks pulled back on credit. And fast forward to today, and actually banks are starting to provide credit again. We started by presenting a term sheet to the community, which was then approved by governance, and kind of the real quote work started. Getting entity formations, engaging with trustees, accountants, attorneys, etc. There's just so much that's been learned in this process that sharing and disseminating that knowledge is just essential for the DAO, just regardless of me, just essential. Kind of here's the executive summary. I continue to believe that the trust structure is the way to scale. Delaware statutory trusts are the way to go with a regulated trustee. A bankruptcy remote entity by statute. It really, really does matter. The trust structure that's being advanced is shielded by statute from having assets attached due to a downstream bankruptcy. There's a reason why the Delaware legislature implemented this. There's a reason why trillions of mortgage-backed securities, CMBS, and other structured products use Delaware as their preferred jurisdiction. And a Delaware statutory trust is at the center of all of it. There's wisdom here for all of us to learn, and there's a reason why we need a deep dive and learn into it. I can assure you that jurisdiction was not selected on accident. The ability to know that legal standing, or the inability, more specifically, that legal standing can be basically defended or a case dismissed, is just essential. Without it, you insert uncertainty and delays to what possibly could be bankruptcy. Been some comments related to trust sponsors. Trust sponsors can only be neutered, quote, so far because they are given certain powers by laws of the jurisdiction of their formation. As long as we're engaging with humans, you still need to have human discretion. For example, reasonable business judgment waivers for a mechanic's lien that's $100 on dirt from a downstream borrower. That shouldn't blow up an entire revolver, but technically it is a breach of a negative covenant. And waiting on a DAO to vote for that is just simply unworkable. The game theory around this is important, but at the end of the day, humans make judgment calls. And if the DAO intends to completely remove the human element, we massively curtail the possible credit space for Maker. When it comes to lending against physical collateral like real estate, Maker still must know who it is doing business with and have reasonable confidence in that party. There is no legal structure that can remove all risk from any lending transaction, and no blockchain can do that until the day blockchain loans secured by physical assets can be enforced in a court of law directly. Even then, I'm not sure we all want to live in that world. Based on the community feedback, an updated version of some of the trust documents and credit agreements will be provided in the form that provides further control for the DAO. Following on, everyone will want high debt ceilings, everybody. There's no doubt there will be a list of people coming up. Just don't do them yet at least. Over the past 10 months, I've spent hours working with the community on secured lending, and many still don't understand this law. Until the community has that understanding, it should not extend large amounts of credit, frankly, to anybody. Some have the perception that this is a technological challenge. It is not. It is a legal enforceability challenge. Getting your money back is the name of the game. By example, naturally, Maker is accustomed to near instant liquidations of collateral, but no state permits any lender, private or not, to instantly foreclose on collateral. Borrowers have rights as notice and ability to cure. Some states won't permit a foreclosure for 30 days. If Maker wants to accept physical collateral into the protocol and be able to liquidate that collateral, it can only enforce such rights through a legal process. And that's meant so both sides have a fair hearing. And that's really important. We have to decide at the end of the day, do we want to be a margin line or a credit facility, i.e. a revolver for the real world? We must crawl, then walk, then run. And a lot of us want to just fly. As I've discussed with more hours than I can count with some influential and respected community members, the trade-offs here are quite simple. It's liquidation capability, the ability to protect the DAI ecosystem, and tools that incentivize refinancing. And largely that depends on if there was a default by the parties downstream. And in the real world, typically lenders are not able to force borrowers to repay early if the borrower is not in default. A lender that tried would be in breach of its loan agreement, and that also punishes a good borrower that did nothing wrong. We also, at the end of the day, have to make sure that what we're constructing is at the end of the day useful and even competitive. So where does that leave us? And Frank, this is really your question. At present, we're in a holding pattern pending DAI to be added to the underlying broker-dealer. We expect that to be another couple weeks to the New York Financial Services. But after many calls and constructive comments with recommended changes to the language of both the credit agreement and the trust agreement, changes are being implemented. This is hopefully going to further constrain the trust sponsor where possible, and also just fixing some clerical errors. You'll see some posts in the forum with red lines in the near future. That said, regardless if the community approves 6S or not, I'm compelled as a Maker token holder personally to advise the community to fully understand the role of a trust sponsor and not bring on collateral to a protocol without diligence into both the underlying lendco and the trust sponsor. In this case, Crestbridge, a regulated entity under the law in the Cayman Islands for the 6S structure, and having full understanding as to how Maker would enforce its rights in the event of a default by borrower. Similar to how an LLC is either manager or member managed, a trust is either beneficiary manager or managed by a trust sponsor. Since the ownership of an MKR is unknown and ever changing, doing KYC on MKR is virtually impossible, at least it is today. Therefore, a trust sponsor must manage the trust by bringing on a trustee. even if it's a directed trust. Further, I'm compelled to stress the significance of the community learning the nuances of secured versus unsecured structures. Recourse and enforceability matter. Legal opinions matter. We all want collateral in the protocol. However, knowing regulated parties have custody and control over the cash or the liens at all times is absolutely essential. Again, crawl, walk, run. Going back to the comments for the moment that I received from feedback that I got from the community, there are some whose comments can be best summarized down to, quote, I don't like it, quote. These comments are not really helpful, nor do they benefit the community as a whole. We, the DAO, the community, must learn the nuances of how to properly manage this before we put our foot to the floor. For sure, there are borrowers lining up, and every part of me says tap the brakes. We have to learn to crawl first. I want to fly a jet, but the ecosystem is just simply not ready for it. I'm exceptionally happy to see companies like RWA companies stepping up for the DAO. Once the broker-dealer has been approved, we'll be able to weld everything shut for the 6S structure and go to closing. We are rapidly approaching the window where all documents on this version 1 will be deemed final, and then closing with the trustee will occur. Personally, I'm expending a significant amount of time, capital, in the pursuit of what I hopefully will be shared by more than just me. That said, I'm hopeful for your vote. We've brought together world-class service providers, and every party along the way is regulated, except for Maker itself. One day, even with a perfected structure, from an equity standpoint, there is a political angle that we cannot deny. What we say matters. Keeping our word matters. This will only be more pointed in the future. Raising equity for structures that requires the DAO to maintain confidence and legitimacy. When I reference equity, I'm talking about the equity investors, the people who are putting the real capital at risk, including my own money for this LENCO. There are no smart contract developments that can happen that will replace legitimacy. We do that. There is no code for that. We must balance the humanity that we expect from downstream parties just the same. Specifically, one area has come up that is worth bringing up such that there's no perception of failure to disclose, and that is required related to the interest rate changes and the rate of interest rate changes increase. Today, the transaction is structured as prime plus a spread. That spread is controlled by the DAO. We're working with the community. I will be working with the community to advance an index that represents something more that the community can control. DSR plus a spread. Today, we have it structured where that spread has some element of a throttle over a quarterly period. You'll see those in the red lines that'll be coming out shortly. As for now, the DSR plus a spread is the idea, but for now, know that the real world has no idea what DSR is and can't recognize it as an interest rate index like prime, LIBOR, or Fed funds. It's an area we're working on. The broader issue is, put simply, the term to which the community can withstand to have the DAI outside of its liquidation control. Today, it's measured in hours. The real world asset lenders are pushing for days and weeks, and 6S is pushing for a few years. As the ecosystem matures, so will the sensitivity to capital being out of the protocol for longer. Are we ready for everyone to continually have renewing revolvers? I don't think we are yet. I've beat my head against the wall, against my counsel, against good, well-intended, very well-respected community members, so much that it just hurts. This is a complicated structure, but one that is decades old in the real world. Trillions of dollars of credit are extended and repaid annually using secured lending structures just like it. I hope the community can see that, which makes comments like the quote, I don't like it, ones all the more pungent and sour, as it disregards and discounts the countless hours and hundreds of thousands of dollars that have been committed thus far with an unknown outcome. I very much want to get the community's input, as these last weeks that are coming up are the point where I embrace the most risk and the venture into the unknown. Doing this in a decentralized way, a vacuum, with an absent counterparty is not for the faint of heart. What is clear to me more than ever is the power and capability that Maker wields is way more than most realize. We all want progress. Basically, everyone's well-intended. Maker has a wonderful future ahead of it. Defaults will happen and folks will stumble and fall. That is not what is interesting. It is a guaranteed outcome for some. What is interesting is what happens when we pick ourselves up as a community. What collateral will survive and thrive? Who will still be standing? We will find out. In addition to the other community members that reached out to me personally, a special shout out to Greg DePrisco at RWA Company for his countless hours thus far. Providing constructive feedback and recommending language changes to the documents has helped the DAO in, frankly, just incalculable ways. He has done so respectfully and in a principled and sometimes painfully firm way. Personally, I found his collaboration and engagement invigorating. We are very lucky to have him in the Maker community. Very lucky. That's all I have. Thank you.
Awesome. Yeah, thank you for that, Matt. I think you covered kind of a lot of ground there. So I know we have a couple of questions in the sidebar. So
maybe more if you can share the timelines you are envisioning going forward. Because what I understand is that you had some, I mean, some people don't like real world asset at all. It's not constructive at all, so it's not super important. But going forward, as you want to amend, yeah, what is the timeline? And maybe more if it is able to. I understand that some people prefer to go privately, but I think some construction should happen in the public forum. And I'm not sure if it's the best way to do everything on a peer-to-peer basis. And it's not for you, it's for the community members as well.
Sure. No, regarding the timeline, like I mentioned, we've received feedback. We're processing that now, and I expect to be posting red lines hopefully by the end of the weekend, if not the beginning of next week. Probably give the community again another week, 2 weeks to digest all of them, and then proceed to closing. Presently, the critical path is still constrained by the broker-dealer and the Department of Financial Services in New York.
Okay, thanks.
yeah, so maybe Wouter, I think you had a good question. Do you want to maybe read that out?
Sure. Since there seems to be some constraint simply in the complexities and the nuances and everything that really the community needs to learn, right? Because if we're going to operate a real bank, then there is a profession to be learned. So is there anything that can be done to help that unblock and increase the speed at which, as you said, like the information is disseminated and people start understanding the important points that need to be understood?
Short answer is being a senior secured lender is an art, not precisely a science. And we have to start small and slow, and it is frustrating. Everybody wants it to go faster. I treat every one of the DAI that would be minted as if it were my own. I am a fiduciary over the equity. I have to do what's in their best interest, always. And that part being said, there's not a good way to skip to how we can take this to billions without, again, learning how to crawl. There's a process we all have to go through that are going to be intimate in this, and there's no shortcut. There is a shortcut, and that's doing it too fast, doing it with losses, and losses are a very painful way to learn.
Yeah, so just to re-emphasize, the question was specifically about helping to educate rather than speed up the process itself. But that would amount to speeding it up further down the line, I would think, right?
There's the best way to do it is to just continue to have weekly calls with folks that want to ask questions. In the last week, not this week, but the week before, I had set up multiple windows for folks to dial into kind of a ask me anything session, and we had very little participation. There's a challenge between we all want it to work and somebody else is going to do it. The only way to learn this is by participating.
Matthew, quick question to add on. Do you think that it would be a worthy investment to hire more professionals that are intimately aware of these structures and have had previous experience like setting up the Delaware trust structures and et cetera, or do you firmly believe that this is really a crawl thing and there should really be only 1 or 2 or 3 cooks in the kitchen, so to speak?
I don't proclaim to say we have a shortage of Lencos. We need to have more of them. It should not be only me. That's not my objective. As far as hiring professionals with the DAO, sure, that can't hurt. With regard to the world-class team we pulled together, at least on my end, you know, I mean, I don't proclaim to know the enforceability of these contracts. That's why we're having an enforceability opinion done by basically the best law firm that does and has a premier trust section in Delaware, which represents Wilmington Trust Company and Wilmington Savings Fund Society. These are the folks that issue legal opinions for multi-billion-dollar mortgage-backed securities. They absolutely know the law. As far as getting other people involved, 100% for it.
Thanks, Matt. That's great.
And to add, we will spend more than 10,000 DAI or dollars just to review the Cayman part, and I'm still waiting for a quote from for the rest.
All right, maybe we can draw a line under the, I guess, the reward assets section there. I think, yeah, Matt's, as I said, Matt, your speech was awesome and had a lot of very good points. I think it would be beneficial to continue having like sort of weekly meetings, right, to sort of let people sort of come and ask questions, and hopefully we can sort of drum up some more participation. So that might be, I don't know, might be a little tricky. I think it's this sort of area of law, I guess, is not for the faint of heart.
Will do. Thank you.
Cool. All right, with that then, let's move on to growth. Nadia, do you have an update for us?
Hey everyone, so here's our weekly update. This week was super interesting. We are starting conversations, more deeper conversations with the Polygon team to see what else we can do together. Actually, Bartek from the engineering core unit joined our call, and he was talking with them. So we're going to see if we can do something else together. But we also are talking with the team to think about what we can do to help our partners who are super interested on integrating DAI on Polygon, to help them, and so they can offer this layer 2 solution to their users. We are also starting to talk with Solana, so we can prepare everything for DAI on Solana launching. That I think it will be like in a month or something like that. So that's also great, because we are talking with other projects that are on top of Solana, so they can integrate these DAI on Solana as well. That's regarding other networks on layer 2. We also saw the post that Derek posted in the forum. I think that's great, and it will be awesome if like we all can participate on how do we want to see Maker growing in other networks and layer 2s. We all know that it's important. We all know that DAI has to be everywhere, but also, and thank you to other core units that are super cautious, and they are looking also that DAI users are like they are taking care of all DAI users. So the research that the smart contracts team is doing is super important also for us, because they are giving us a lot of feedback and input, so we can understand what is happening in all these other networks. Like, we know there's a lot of adoption, but we also have to be careful because of what could happen in the future. We also are having conversations with these important users of the Maker protocol, because we want to know what they think about Maker vaults, and we want to improve the way they are using our vaults. We want them to mint more DAI, and we know that these institutional vaults or custom vaults are important, so Maker can be even bigger. So we had a conversation with Nexo, and we will be having other conversations with Celsius, Aave, Fireblocks, and companies like that. And as soon as we have more information and everything more digested, I will post something in the forum to tell you all about what are this is about and what is the feedback that we are getting from them. And well, the start of the week is India, because we are seeing a lot of adoption of crypto, although they are facing this, they're struggling with everything related to regulators. But apparently that has been the trigger to to start all this interest around crypto. We are working closely with SafePay and BPNS, and we are trying to create not just listing DAI, but creating a product so people in India could be more attracted to use DAI on those platforms. And we are seeing a lot of potential in this country because there are about 340 startups that are doing something related to crypto. So it's like a great opportunity for us. And well, all this is led by Jocelyn, who is in charge of the Asia growth strategy. So that's all for this week. Any questions?
Hey, Nadia. I'm not sure if you can disclose this, but are there any conversations with more TradeFi companies? Just seeing a lot of headlines from, the normal people, PayPal, Venmo, and maybe there's some of them that I've never heard of in South America or Asia. Are you guys having any conversations like that? I'm not sure if you could speak about that.
Yes, we reach out to them, to companies like the ones that you mentioned. Thing is that usually they look for more regulated stable coins like USDC. So we are also talking with Paxos, trying to figure out what can we do in that sense. And also that's why we wanted to understand what these institutional vaults are thinking. Companies like Nexto, who has this huge vault in ETH and Bitcoin with us, we want to understand what they need, because I think we have first to have a product that is something that these institutions would use, and then we can go and look for these institutions to use that product. Because for now, I think we have the maker vaults are the way we decide the risk parameters is not because we are thinking about these huge institutions that are going to put their crypto treasuries in the vaults, but we are more thinking in how the market is. So I expect that after these conversations with Nexo and others, we can understand better what they are looking for, and then we can have a more customized product for institutions. But of course, there's also the restriction we have, because we know that these institutions are looking for something more regulated, and DAI is centralized, so it's not necessarily what they are looking for. But we are trying to figure out if maybe there's a third party who could provide services to them using the maker protocol in the back.
Good stuff. And are there any wallets that you can name that maybe we've never heard of, maybe in Mexico or Central America?
Wallets?
Wallet providers that can distribute DAI, that can help DAI grow in those areas. I'm just trying to figure out if people in Latin America are using things I've never heard of.
Oh, yes, Frank, definitely. Actually, I think I posted in the forum recently how DAI is used in LATAM. You can find different wallets, exclusively for DAI. But the thing is that we are having this big problem with gas fees. So we are trying to solve different things in parallel. We have to help our partners to integrate their solutions and integrate DAI on a layer 2. We are also trying to figure out how to have this product that could serve the needs that institutional companies could have if they decide to open a vault with us. And we are also trying to find like a third party who could like help us as the front end with the institutions, just in case they need something more regulated. So we're like trying to figure out how to manage everything. But yes, we're on that. And yes, actually, well, sorry, but because we have a lot of work, and for me it's super hard to like to write something in the forum, but I promise you that I will try to post something about different wallets that are like that integrated DAI, and also all the efforts they are doing to integrate DAI on Polygon, for example, even Binance Smart Chain, so they can provide a solution to these users that are using DAI on a daily basis. And we are waiting for DAI on Optimism, because we really want to like do something with our partners, helping them to integrate this DAI and like try to reach more retail users.
That's awesome. Thank you, Nadia. Appreciate the feedback.
Yep, thank you, Frank and Nadia. That was awesome. Let's maybe move on. We're running a little short on time, but we should be able to get through the next through our agenda here. So content reduction. Do you guys have an update for us this week?
Yeah, thank you. Hey everyone, Seth from Content Production. Just got a quick update. We've been working with Amy and Anna on getting ownership of the community portal. We've got a plan to get the site transferred over to a new domain in a way that preserves the SEO. So we're working on getting everything moved over there. That's really cool because it means we'll have a hub for all our educational content. It's got really strong SEO, and the CMS has been designed in a way that makes it really easy to integrate contributions from the community. So I've already reached out to a handful of people about how the content's going to be reorganized there, but if anyone has any concerns about the way different parts of the protocol are presented on the portal currently, please reach out, and we can talk about what we can do to improve that. The foundation is still doing a legal review of properties like Twitter, Telegram, and LinkedIn, and even the analytics makerdao.com. So we're still communicating with them about getting those properties transferred over to the community. But in the meantime, we've got a couple of events coming up. We've got an AMA series we're going to be doing. The first one's on June 3rd. With William Ramore from Real World Finance. So if you have questions about that, we would love to see you there. And if you can't make it, we'll be posting recordings on video, audio, and transcript afterwards. And Matthew, I wasn't aware of your AMA, but I'll reach out afterwards and see if we can get it on the calendar or do something to help make it a little more prominent.
Sure, happy to.
Yeah, cool. We're also going to be doing a series called What the World is Doing with DAI. This is basically a replacement for the community call that David used to host. The purpose there is to spotlight integrations and all the cool ways people are using DAI. The first one's going to be with Curio Invest. They've made it possible to invest in tokenized collectible cars using DAI. So we'll have more information about that in the forum soon. We've also hired a part-time designer who's going to be helping us out. So if anyone has any design related needs, please reach out. We'll see what we can do. Thanks to Bourbon for helping us find her. Very excited to be working with her. Yeah. We're also starting to look for a community manager, a blog editor, and someone to handle video production. So if anyone has candidates who might be good for that, please send them our way. And the last thing is that we've got a post up in the forum about a mascot for MakerDAO. There was some conversation started around this a couple of weeks ago, and there's been a lot of input there. I believe right now the capybara and the dragon are looking pretty close. So yeah, please go vote on that. Yeah, that's all for the content team. Happy to take any questions if you got them. Otherwise, I'll kick it back to Long.
Excellent. Thank you, Seth. Looking forward to seeing a jellyfish mascot soon. Let's move on. Operational support of your update.
Yeah, I'll try to be really quick. So a few announcements. So first, operational support. Here's our final update that we'll be giving because of operational support is officially dissolving at the end of this month. We were providing some support to some core units, but now all the projects have been handed off, and I'll be officially offboarding as a facilitator, and Juan will be charging on as a facilitator at SES, which is pretty awesome. Just a few quick things about that. The calls like Know Your MIPs and the collateral onboarding, those are going to continue. There's in the link, in the forum link, there's just details about if you know there's projects that want to present. The next pod session is with Nick on June 2nd, so that's going to go up as well. I'd recommend looking at some of the resources and discussions for core units. It's in the last very end of the forum post. So the second announcement is, as part of the foundation dissolution, community development will be sunsetting as of May 31st. It's really kind of quite a story. I mean, I started as a contributor to ComDev almost 2 years ago, and I think of community development as this door for people to get more involved with MakerDAO. There'll be a more formal communications that comes, and that's going to tell our story and some of our programs. I'm really proud of the team, our accomplishments and the reach of our programs. I really love the work that we've done. And I wanted to mention, like, when I took this role, I'm sorry for all the crazy buzzing. When I took this role, I told Rich I wanted to be like an interim head of community to set a precedent for what was going to come in this like decentralized nature of the DAO. And I just couldn't imagine that there would be this head of a entire decentralized community. And that's true. That's why now we have 9 facilitators, and that's just like been so amazing to see. And this kind of rolls into the third announcement, which is next week will be my last week at Maker. The experience of transitioning from an org to like a fully community-led DAO has been one of the most like unique, challenging, rewarding, and fascinating experiences of my life. And it gave me such an insight to the future of an organization in distributed tech. And I'm just super, super bullish on how this is just going to be the future moving forward. So it's bittersweet that I'm leaving at such a like prosperous time at Maker, obviously, but it's all the more exciting for everybody who is here. And I know MakerDAO is just going to grow like 10x. So I'm just leaving with such a full heart. And so that's it for me.
Can we decline this somehow? Vote against it? Oh man.
I don't think that you can actually offboard. I'm pretty sure we didn't create a MIP for that.
Actually, I spoke to Long. We offboarded her if it's voluntary. There's no RFC required or votes.
We should fix that.
No, yeah. Well,
we had that with Rich.
And 41 actually has the requirement, but we had to overrule it because it makes no sense.
Yeah, we had the situation with Rich. Rich offboarded and everyone voted against him leaving, which was amusing, but problematic from a governance perspective. Yeah, I think Amy, we're going to miss you a huge amount. At least I know I will. Yeah, it was kind of funny because after Rich kind of left, he kind of pushed all his responsibilities on kind of me and Amy, which was kind of stressful. So yeah, I think it sort of helped me a lot to have someone else in the kind of same boat. yeah, great times. Yeah, but it helped me a lot to have someone else in the same situation that I could kind of chat with. So that was awesome. Yeah, so I hope you meet the greatest success in your future endeavors and such.
I mean, we could just like buy whatever project she's going on to next and get her back. Alternative, just floating it.
We have
maybe wants to put that in the forums. Yeah.
All right. I suppose let's move on then. Sustainable ecosystem scaling. Fun, your core unit was onboarded. Congratulations. Do you have a brief update for us?
So we will. This is Juan from SES for those that don't know me. Just wanted to thank everyone on the name of the whole team. We were celebrating online earlier today, and we're very excited to start next week. So we're very happy to officially join everyone, and hopefully we can start providing value as soon as possible. And regarding Amy, yeah, it's sad that she decided to not continue with us. So I think we will all miss her, and we'll miss her presence. But she said there's no amount of dire maker that can make me stay, and then smash the door on her way out. So yeah, we have to live with that.
All right. Cool. Let's I guess rush through our MIPS update then. We can get to some of our segments.
Yes, it is I. Please give me share screen.
There you go.
All right, bear with me here for just a moment. All right, cool. Should be good now. This full screen. All right, cool. Yeah, welcome everybody to the weekly MIPS update. I'm David Utrobin, fellow MIP editor and contributor. So let's get into it. So we actually, do you guys see this? I should minimize this a little bit. Yeah, so sorry about that. Yeah, so this is the month of May. It's currently the 27th. So we just wrapped up the MIP, the bundled MIPS vote, which passed. And so we are coming into a gap week. And so this is what was part of the MIPS bundle. We had the Sustainable Ecosystem Scaling Core Unit get passed. We had the technical MIP for the direct deposit module pass. We had the new monthly governance cycle MIP pass, which I'll get into in a little bit. I know I got into it in previous weeks, and I will show those same slides so you guys are not caught off guard with the changes this coming month in June. And lastly, there was also an amendment that passed to MIP 0. It didn't really change any of the logic, but it did clean up the MIP, making it a lot more readable for the casual researcher community member. So yeah, 2 MIPs, 1 core unit, 1 amendment this month. Awesome stuff. As for next week, it is a gap week, so it is not part of the monthly governance cycle. Instead, it's just going to be the usual weekly cycle like we have every week, where on Monday, May 31st, we will be having the usual round of governance polls. They're going to go live on the 31st at around 4 p.m. UTC, and they're going to end on those usual 3 days later, well, actually 4 days later, on Thursday, June 3rd, at around at exactly 4 p.m. UTC for that one. And then Friday on June 4th, there's going to be an executive vote as usual per the weekly cycle. So next month, June, no more old cycle. So we no longer have inclusion polls. We no longer have bundled governance polls. We don't even have a bundled executive vote anymore, ladies and gentlemen. So congratulations to governance for making everybody who votes life a little bit simpler, because this is the new setup. So nothing changes with regards to formal submission. Formal submission is still happening during week 1. So for June, it's going to be the 7th through the 9th. And then on the 10th, during this call, Long for Wisdom is going to do, or whoever the governance facilitator who's going to take that on is going to do the submission review. After that, there's going to be 2 weeks of ratification polls. These are not bundled, they're individual polls for each proposal. And I'm going to basically give a brief overview of what exactly those are in the next slide. But yeah, at the end of week 4, there is a governance cycle review done also by the governance facilitators on this call. And so, yeah, we gained a lot of efficiency here, folks. So I'm really excited about this. And so the ratification polls, they are for 2 weeks. They require a minimum positive participation of 10,000 MKR. Yes must exceed no, obviously, when the poll closes. And the yes vote weight must exceed the minimum positive participation value when the poll closes. So it's a binary poll. Or trinary. I make this joke every freaking week. Yes, no, abstain. So yeah, really excited. No more bundling stuff. It's cool. It's cool. As for new MIPS and RFC, we have a handful. We have a handful of budget updates. Recently saw Real World Finance put up theirs, but yeah, we have 3 basically: SES, Gov, and Real World Finance. We also have the technical MIP for DSS Best. We have a process MIP for dispute resolution at the DAO. And we also have MIP 53, which are the MKR compensation guidelines. And keep in mind, there is a huge discussion going on at least around the MKR compensation guidelines, not so much around dispute resolution. I think generally speaking, there hasn't been too much feedback on that one, which leads me to believe that people somewhat agree. But I definitely encourage you all to check that out while they are in RFC, so that you can give your feedback and so that the authors of these MIPs can improve them. And so, yeah. We also have Collateral Onboarding, which is a core unit solely focused on the collateral onboarding aspects of the Maker protocol, newly submitted this month to RFC. It's Monkey Irish for the facilitator, with a proposed annual budget of 2.5 mil, a team size of 6 permanent people with an additional 2 temporary roles. And also we had Strategic Happiness posted by our favorite happiness officer at MakerDAO, Bourbon. It's a core unit focused on community engagement by memes, swag, and good vibes. Yeah, the proposed annual budget is a whopping $0 a year, with a 1 MKR annual grant and just like a partnership with the swag shop. And as for renewed MIPS and RFC, this is actually a core unit that was in RFC for a couple of months, but I'm actually the one who's heading this core unit. We put up a updated mandate actually on the 26th, a couple of days ago, or was that yesterday? So yeah, check it out. It's pretty fresh. The whole mandate is pretty much written from the ground up, from scratch. We took into account a lot of the feedback that we received in the initial RFC period, and it led us to extend that. So we're aiming for a July formal submission, and in the meantime, we're open to any feedback that the community has to make this core unit really great. And of course, it's a core unit that offers resources and services that focus on information accessibility and communications as a public organization. So read more about it there. But yeah, I'm putting myself up for the facilitator role. Our proposed annual budget is approximately $450,000 a year, with a team size of 3 permanent full-time roles and 7 part-time contributors. But of course, the part-time contributors is like always a revolving door. So yeah. Any questions, feel free to ask, but that's about it for this week.
All right, so we don't have a lot of spare time, so I think unless anyone has anything pressing, we'll continue. So normally we do the May governance cycle review. Here, I think myself and David have kind of both made clear what happened in the May governance cycle. Yeah, I think there's probably not a lot of use in sort of analyzing it in detail, given that we're changing the structure anyway. So yeah, maybe we'll push some of the discussion if there is any, I guess, to next week. And we've got a little bit of a gap week, considering we've got a couple of other things we want to get through today. So with that, let's have the segment from risk. So we're gonna put a callback. We've got DAI price dynamics and risk metrics, presented by Marco, I believe.
Yeah, hello. Can you just give me the sharing rights, please?
Yep.
Okay. So hello everyone, I'm Marco from the risk team, and today I want to show some developments which took place during the latest price crash regarding DAI, its ecosystem, and the significance of PSM for maintaining the peg. So the first topic is DAI supply and its underlying dynamics. This is data sample 1 week old, which starts 1 day before the crash, so the 18th. And basically, as you can see, the net DAI loss during this time period was approximately 590 million DAI. And this was basically a subsequence of 2 major dynamics. So the first was all the vaults which are collateralized by non-USD nominated collateral were either unwinded or liquidated, and this basically resulted in approximately 1.2 billion DAI disappearing. And of course, the difference is mainly DAI from the PSM. Now this figure here is actually a bit larger because it also consists of all the DAI from other stablecoin vaults. They will most likely be, converted to PSM soon. This is basically the same data visualized with a bit longer time period. Basically, we can see here that DAI was increasing quite rapidly in supply during these days. And basically on 18th, we achieved all-time high in DAI supply. And basically on the next day, we experienced this large crash of Ether and other assets, of course. This was basically the second largest crash of Ether in recent history of trading. And then there was another crash on 23rd. This was a bit smaller. But basically what is interesting here is that as soon as basically vaults started to unwind and getting liquidated, the DAI minting from PSM visibly increased. And basically, just data like this data alone already points to how significant PSM currently is for actually maintaining the price of DAI in such distressful situation. This brings us to the second topic, which is DAI price. This chart, unfortunately, I didn't have some better tool or website to present this data, but basically what we are looking at are ETH DAI trades only. On the vertical axis, we can see the price of DAI at which each of those trades were settled. And basically the size of bubbles represents the relevant volume of these trades. And basically it is obvious that on 19th, something unusual was happening with the DAI. We had this price divergence in both ways. And basically this is the subsequence of extremely volatile price of ETH. I will just quickly jump on TradingView. This is ETH USD. Bitstamp 5-minute bars, and basically as we can see price was insanely volatile. For example, this is 16% price drop in 5 minutes, and then we had approximately 13% price increase, and basically all of this was happening together with really high gas prices, and basically in this kind of situation, it is really hard to arbitrage this, price divergence away. Like I'm showing ETH DAI trade specifically because, I think that this is not a general problem of DAI supply. This is basically a problem that a sudden demand which happens, really, really fast, can basically, cannot be combat by just like larger supply of DAI. And basically to combat something like this, we need something else, which is PSM. And basically PSM is really important because it offers risk-free arbitrage, right? When there are conditions on other markets such as this. Here I just want to show some of DAI price dynamics on centralized exchanges. This is DAI USD on Coinbase. And basically, as we can see during 19th, the pressure of DAI was obviously high. These price spikes are most likely a subsequence of some arbitraging between this specific market and some on-chain market. Here, this is Binance USDT against DAI. It's an inverted pair. Binance lately also became like quite large centralized venue for trading DAI. And basically here we can see that DAI had a premium against USDT. The last market which I want to show is Curves free pool. This is basically the largest trading venue for DAI in existence. And this is AMM, so basically with 3 assets. So the target asset proportion for each asset is 33%. And as we can see here already before the crash on the 19th, basically DAI was below this target ratio. And on 19th and on 23rd, it is, visual that, people were buying DAI out of this source as well. Here I want to say something specific about this market. Curve is using something called amplification coefficient. And basically when this coefficient is really high, it will basically negate the slippage on between these assets. And this is basically a reason why DAI doesn't have a premium right now. Here I will just jump on the Curve Finance itself. I want to show basically 2 things here, sorry, 3 things. The first one is the current price, which is slightly above the peg. And basically this is a subsequence of different fees. So Curve has its own fees. We have fees in PSM, and additionally for each such trade, you need to pay gas fees. So it is basically impossible to arbitrage this slight premium away right now using PSM. The second thing which I wanted to show here, oh, sorry, I forgot to mention, this is basically virtual DAI USDC order book consisting of all different pools which consist DAI. And basically, so like what I wanted to show is that if we would want to bring DAI exactly to peg against USDC, we would basically need to inject, approximately 250 million DAI into the pool. And then on the other side, I will just zoom this out a bit. Basically, if somebody would to make a larger trade of buying DAI, it would already result in quite high premium. This is already 2.6% about the peg. Okay, so basically I just wanted to show this data and say how significant the PSM mechanism was during this distress situation. And if there wouldn't be any PSM, or if there wouldn't be any depth ceiling available in the PSM, we would most likely still have DAI premium. Then the second thing which I wanted to say is that we definitely want to, find out, look for ways how to reduce the reserves in PSM during normal market conditions. But this is currently really hard to achieve because of all the non-economical liquidity mining schemes present. Then I also wanted to say, and also many other community members pointed this out, that we should definitely diversify reserves into the USDC. Right now, I think we already back 38% of DAI with USDC, which is, mostly, which is basically unacceptable, right? And then finally, in the longer term, we should definitely seek some kind of alternative approaches, how to, maintain this hard-pegged kind of mechanism, which is currently present because of the PSM. Yeah, this is basically it in regards to DAI and the PSM. Now, if I can, I would like to spend a few more minutes to showcase this risk dashboard which we are developing within the risk team. Basically, the purpose of this dashboard is to showcase all kind of different risk metrics and information about vault types and collateral assets. I will not show everything. I will just show things which I think are the most interesting here. So this is the liquidation curve for all the assets. And basically, as we can see right now, a large chunk of vaults are quite risk averse since the latest crash. Basically, if we would look at this same chart a few weeks ago, it would be more positioned to the left because, vault owners were just more risk on. The second thing which I want to show are the slippage curves. We construct these curves using 1-inch API, and basically each of these data points shows, what would slippage be on chain if, somebody would sell some amount of assets in one transaction. This zigzag-ish pattern is basically a bug because of how these transactions are routed, and we are working on fixing it. We also have historical slippage curves here. So basically, we take the snapshot of each daily slippage curve. And finally, I just want to show these risk parameters and different kind of information regarding vaults. Of course, we cover all different collateral types and vaults. Here at the top, we have some basic information, just state of the vaults and risk-related things. Here on this chart, we show the most recent risk premium calculation for this specific asset. So in this case, it's ETH. And right now, it's extremely low, as you will see later, which is basically a consequence of few different things. Here on the right, we have the liquidation curve for ETH specifically. We see that this big liquidation vault would occur at 1.7K ETH USD. And basically, this is one of the reasons why the risk premium is currently so low, because basically after the price of ETH increased in the recent days, vaults did not maintain their leverage, but basically increase their collateral ratio. Here we show historical risk premiums. So basically, for example, this point is here. And as you can see, a lot of them are, this is extremely low. And of course, when we calculate risk premium for proposed parameters, we take some kind of average. Here we have collateralization buckets. This is basically collateral ratio distribution in this specific vault type. We can see that some bars are much larger than others, and this is basically because the depth is quite concentrated between few very large vaults. Here we have some liquidity metrics. This is the slippage curve again. This is trading activity, basically just trading volume on centralized exchanges, but we have our own methodology of picking pairs and exchanges. It is similar to Messaris. Here we have the on-chain liquidity in different, AMM pools and different markets. Right now, we are only covering SushiSwap and Uniswap because they are the largest, but we plan to add more protocols. Here we have trading volume on these decentralized exchanges on chain. Here we have some basically price drawdowns. This is basically just the distribution of drops. And basically in the recent, trading history of ETH, Black Thursday last year's March was the largest price drop, and the second largest was May 19th, the recent price drop. Okay, one last thing which I want to show, because I saw that some community members were interested in this. Basically, if you go here and click on this button, see all vaults, you will be able to see all the vaults in one one vault type. And, for example, we can filter by depth and see who are the largest vaults. This is basically all I wanted to show. We would appreciate if people can check this out and give us some feedback, because we want to further develop and improve this. This is basically it. If somebody wants to ask something, please do.
Hey, Rima, with the SEX trading volume, do you get to see when, there's 1,000 BTC moving from, or WBTC moving from, Ethereum, from an Ethereum wallet to maybe FTX? Are you able to follow that or no?
Like currently we do not follow basically on-chain balances only for this Uniswap and SushiSwap liquidity, but like we do have this on our agenda to basically cover, for example, how many assets that we keep in our portfolio are on different deposited on different exchanges. Like in regards to just like on-chain balance following, we plan to also start, systematically analyze Vault users and what they're doing with their DAI. This is quite relevant for some situations. For example, if there is some user which basically use MakerDAO to get DAI from some kind of collateral asset and then basically farms with it with recursive leverage position on Compound or Aave, we basically know that this specific entity is able to unwind his vault on demand, right, without actually bidding up DAI. But like for your specific question, if we will follow just like transfers from exchanges to some different source, yeah, I think that we could do this, but this is not something which is planned to be developed soon.
Okay, I was just wondering if you saw, 10,000 ETH move out of Compound, if you saw that being done 10 times over in 24 hours, if that kind of would give the risk team and also the PE and Oracles a heads up, if there's going to be large sales and stuff like that. But yeah, this is super cool, man. Thank you.
Okay, cool. Yeah, that's it.
All right. Yeah, thank you very much for both of those, Marco. I think that was kind of great explanation of how the PSM is useful. And yeah, the dashboard is genuinely awesome. I used it a lot last week. I know a bunch of other people did as well. I think great job. Wouter asks if this is open source.
Yeah, we are planning to open source all the models and everything. We just need to write some documentation. But yeah, we are funded by the DEO, so of course this is kind of should be owned by the DEO. We're still figuring out how this should be done. But of course.
Cool. All right, so I know we're a little bit over time, so yeah, Andrew, up to you if you guys want to go ahead today or not. To you.
You didn't ask me something, right? I was just on the call with them.
Yeah.
Oh, you asked me. Okay.
Yeah. Do you want to go? Yeah.
Yeah, I want to go. Tom, are you just turn on your mic?
Howdy.
Hey. Okay. Yeah. So, some of you may or may not have read. We proposed a pre-MIP just to spark a discussion about the maker burn. Not, I have a light understanding of how we burn, but it's not entirely random, but it's it's called with the lerp function, and we burn sometimes at optimal times, sometimes suboptimal times, and the idea would be to have something in place to reduce the cognitive overhead, if there is any, of when we should be burning, when we shouldn't be burning. So some sort of automated thing that burns maker more, like when it becomes a more optimal time to burn. So Tom has been working with a friend to develop a strategy to sort of counter trade the market. We've had like reasonable success with it. The signals are very good. It's just a matter of whether or not we listen to them, which we are working on. But the signals are actually very, very good. They apply pretty well to a lot of the other coins as they trade on market. And I think we can work to build something that can be used for burning maker as well, right? So like price is just going up. Maybe you don't want to be burning there. But like if the market's scared, maybe that's a better time to burn, right? So like last week was a good example of when we have been burning more. And maybe we shouldn't have been burning the moment we started dropping. Maybe we could have only burned a little bit and then cranked burning as we fell more and more. And you know, there could be many ways to approach that. Some people mentioned implementing when the PE gets below a certain ratio. That could be one sort of idea. It's not price. We wouldn't be going, yeah, Chris, we wouldn't be going with price. So someone, I think maybe it was you, Chris, that proposed PE. That's also sort of like a stand-in for it being undervalued, right? But something to identify that the price of maker is, you know, undervalued, or just that the whole market in general is in a state of fear or panic, and you can sort of increase the burn during those periods and reduce burn when it is not necessarily optimal to burn, and have DAI that would be going towards the burn sort of on standby. So like how much of the surplus buffer we want to burn, I think we have 25% going burning right now. So we can, within the realms of however much we set aside towards burning continuously, some of it can go through like a DCA type strategy. Some of it can go through a strategy that optimizes a burn. And so we would like to work on, yeah, so Peyton says, yeah, so the original suggestion of this pre-MIP was short interest. And that's, you know, that's in part like how we've structured what we trade against. So when people are shorting, once people maximize shorts, they get really scared of the market, and typically those will mark low points. They'll at least mark a local minimum, if not a global minimum, in the price, and it tends to line up pretty well for catching these points, and it could be a good place to increase burn. So like when everyone is scared, right, without knowing what the price is or what direction the market is, you could probably identify that this might be a better place to burn. We're probably at a local minimum, and you don't need to know what the price is necessarily. Okay, 5 minutes. So Tom, maybe you want to show, if you want to do a share screen. Long, do you want to like do a quick, can you let them share a screen? You could just show a few places where we had some signals that might have been good places to burn out.
Yeah. All right.
There, of course, will be false positives, but
so if I can just explain this really quick, can you guys see this?
Yep.
All right. The dotted blue lines are just simply times when Maker was started being heavily shorted, and you can see that by the. This is just an example of one metric we could use. I strongly suggest we don't use just one metric because that can be manipulated. So instead, we'd want to use like a range of metrics that are hard to manipulate. But you can see if you just bought the two dotted blue line, or burned rather, in this case, the two dotted blue lines, you'd have it would be this arrow like roughly here and here. So your price of there and there, you got about an average burn of 2,700. That puts you well below the price and pretty close to just catching the bottom and catching a knife. I mean, if you consider how far we dropped. If you took we have another strategy, which I didn't show here, but I just marked off the levels. These yellow levels is the one that Andrew and I are using to trade. And you can see that gets you probably about an average price of 3,200. And so you can see just a simple metric like funding alone, even like at a base level, like an unrefined version of it, gives you a very tactical and metric-based way. It's like a data-based way to know when to burn. So you're not leaving it up to like human emotion and semantics, or like in the moment. And so this is like one sentiment-based indicator, but you know, there's lots of them. Like Glassnode has and CryptoQuant have a really nice selection of them. We have some maker-specific ones, you know, like PE. I mean, I think that like if we had a small team of people just working together on this, we could come up with what are the right metrics and how to analyze them in a way that's like kind of tamper-proof. Where like basically the amount of money it would cost to manipulate the market to get us to burn would be absolutely ludicrous to do it. So it just wouldn't happen. I think I just wanted to show this is just one example of something that we could build very easily that is already, I think, going to be pretty successful. It backtest rather well. I just didn't want to blow everyone's mind, but this is just an example of how it would have performed on the dip here. So if anyone has any questions, feel free to ask me. But hopefully,
and those would be levels where we're increasing how much we're burning. So we might have a constant type of burn, but you know, once we hit like, you know, signal, we would start increasing the amount of burn. And then as the market starts, you know, getting euphoric, you might want to reduce how much you're burning, right? And yeah, the implementation of this would be, you know,
and we might not want to do only open interest because that might come off as mean to shorters or whatever. But like was like one metric we could use to gauge market sentiment is the idea there. So.
Yeah, thank you for the presentation, Andrew and Tom. I think we'll maybe try and wrap up now. We're a little bit over time. So yeah, I would encourage anyone that thinks kind of has comments or ideas on this topic to go to the forum thread that was shared in the chat. I'm sure Andrew or someone can share it again. And yeah, leave your thoughts there. All right, so I think we'll wrap up for the week. Thank you everyone for joining us, and we will talk to you all soon, I'm sure. Thanks.
Thank you for your time.